So, you want to run an experiment? For one full year, nobody on Earth pays a single tax. No income tax, no payroll tax, no corporate tax, no VAT. Every government on the planet just stops collecting. I know it sounds like the ultimate stimulus, a global tax holiday, every paycheck landing 20 to 40% fatter overnight. It is not that. Not even in any way close. What actually happens to a hospital, a highway, repaving contract, or a social security check the day the money stops arriving? Has any government ever run a real version of this? And why does the answer eventually point at a revolution? Let's ground this in the country with the most detailed public numbers on exactly what taxes pay for. The United States. In fiscal year 2025, the federal government collected about $5.2 trillion in revenue and spent $7.0 trillion, which means even with everybody paying in full, the government still had to borrow $1.8 trillion just to close the gap. Now imagine removing that $5.2 trillion entirely, and also assume government didn't borrow the $1.8 trillion for the year. Suddenly, it's borrowing the full $7 trillion because every dollar of spending suddenly has nothing behind it but debt. Individual income tax alone makes up about half of that $5.2 trillion, roughly $2.66 trillion. Payroll taxes, the ones pulled directly out of every paycheck to fund Social Security and Medicare, add another $1.75 trillion, about a third of total revenue. Corporate tax contributes just 11%, a little over $450 billion. The payroll number matters more than it looks. Social Security isn't a personal savings account, it's pay as you go. This month's checks to retirees are funded by this month's withholding from working people. Stop the withholding, and the checks don't shrink gradually. They stop almost immediately unless the government borrows to cover every one of them. Layer a single missing year of $7 trillion in unbacked spending onto a national debt that already sits around $39.4 trillion, and the debt grows by nearly 18% in 12 months. Here's the part that makes this less hypothetical than it sounds. A smaller version of this experiment runs quietly every single year, and it has a name: the tax gap. The IRS estimates that for tax year 2022, Americans failed to pay $696 billion they legally owed, an amount equal to about 15% of the country's true tax liability. Even after late payments and enforcement, roughly $606 billion simply disappears every year without a single law changing. The system doesn't collapse because of it. It just quietly borrows to cover the shortfall and files it under fiscal policy. Multiply that ongoing leak by roughly 8, and you'd have the entire federal tax base for a year. For a preview of what happens once the leak stops being a rounding error, look at Greece heading into 2009. Studies at the time placed the country's shadow economy, wages paid in cash, off the books, undeclared, at somewhere between a quarter and nearly 30% of GDP, among the highest rates in Europe. Uncollected taxes had piled up to roughly 95 billion euros by 2017, up from 76 billion just 2 years earlier, and the ongoing bleed from evasion alone ran between 11 and 16 billion euros a year. The country's budget deficit spiked past 15% of GDP in 2009. What followed was 289 billion euros in international bailouts, an 8-year recession that shrank the Greek economy by a quarter, and a decade of austerity dictated by creditors in Brussels and Berlin rather than voters in Athens. Greece never stopped collecting taxes entirely. It just collected enough less for long enough that the gap between promises and revenue turned into foreign-controlled debt. Now go back further, to a government that ran something close to the full version of this on purpose. In the decades before 1789, The French monarchy financed a string of expensive wars almost entirely through borrowing because its own tax structure exempted the two classes best positioned to pay. The clergy, who owned roughly a tenth of all land in France, paid no direct tax beyond a voluntary gift to the crown. The nobility carried similarly sweeping exemptions. That left the weight of direct taxation on the third estate, the commoners, while war debt climbed toward roughly 4 billion livres by 1788. Every attempt by the crown's finance ministers to tax the privileged classes even modestly was blocked by the nobility and the regional courts that had to approve new tax law. The monarchy kept borrowing to cover what it couldn't tax until it physically couldn't borrow anymore. And Louis XVI was forced to convene the Estates General for the first time since 1614, 175 years earlier, just to find new revenue. That meeting didn't produce a tax reform, it produced a revolution. Every one of these cases is the same mechanism running at a different dose. Spending doesn't pause just because collection does. Hospitals still need staff, bonds still accrue interest, pension checks still go out. Somebody has to cover the difference between what a government spends and what it collects. And if it isn't taxpayers, it's a lender. A lender charges a rate and eventually starts asking harder questions about ever being repaid at all, which is exactly what happened to Greece and exactly what happened to a monarchy that ran out of people left to borrow from. The bill doesn't disappear the year nobody pays it. It just changes whose name is on it, and it tends to arrive later with interest attached, addressed to whichever government has to explain why nothing got cheaper and everything just got borrowed.